there is an increase in NBFC and fintech consumer durable loans when compared to the scheduled commercial banks in 2023. Scheduled commercial banks have disbursed few consumer durable loans during the year 2023, while most other retail loan categories are growing fast. Consumer durable loans are declining from the scheduled commercial bank side because NBFCs and fintech lenders are increasingly providing loans to finance consumer durable purchases. During the period of COVID, that is around August 2020, the RBI reported a drop in consumer durable loans to the extent of around 9,053 crores. As consumption revived in August 2022, there was a sharp increase to the extent of 32,919 crores. There was also a surplus with banks that made it easier to obtain these loans. As of August 2023, banks held 21,221 crores in consumer durable loans. The majority of other personal loan categories experienced growth between January and August, which is very surprising during this year. There was a decline of 42.5% in consumer durable loans during this period, but growth of 30.1% in housing loans and a growth of 16.6% in terms of credit cards and 15.9% in terms of other personal loans during the same period could be seen. Contrary to expectations, the country's demand for durable goods is growing despite a decline in consumer durable loans. Indian consumer products experienced an 8% surge in value for technical consumer goods in the first half of 2023. The volume of air conditioners grew by 7%, washing machines grew by 6%, and microwave ovens grew by 4% compared to 2022. Consumer durable loans decreased despite a rise in consumer products, possibly because of non-banking financial companies and fintech companies. The rise and evolution of India's digital finance, as published by TransUnion CIBIL, shows that NBFCs with 31%, private banks with 20%, and fintech companies with 15% contributed the most to the consumer durable loans during FY23. Whereas the contribution of banks in public sectors is just 1% to consumer durable loans when compared to NBFCs, private banks, and fintech companies. As we all know, NBFCs and fintech platforms currently lend to consumer durable sector in India in addition to banks. Consumer durable loans growth is supported by online payments and EMIs. Although NBFCs and fintechs offer more loans and payments than public sector banks, but the convenience provided by public sector banks cannot be compared with that of NBFCs and fintech platforms because lack of stringent oversight and the kind of recovery techniques of these NBFCs and fintech companies differ significantly from those of our traditional banks. NBFCs and fintech companies often exceed regulated boundaries and resort to problematic methods in order to recover their money. Though the recovery mechanism differentiates NBFCs and fintech platforms when compared to that of scheduled banks, but overall, the contribution of NBFCs and fintech companies cannot be underestimated at this point of time, as their surge is contributing a lot to the demand creation in our economy. Hope the information is useful. Thank you very much for your patient hearing.